Hello, everybody. Steve, what's happening over there?
I think Steve left his mute on.
Muty. Hello, Steve.
Oh, I know he's
Sorry
got.
about I'm sorry about that, guys. I was grabbing a cough drop. It's either hearing a cough drop rattle around my teeth or hearing me cough.
All right.
So here I am. What was the question?
We're all good. Just saying,
Okay.
hey, what's up over there, Steve?
Hey, what's up over there, Jamie? Happy Monday.
Happy Monday to you. And I, too, have had to ingest cough drops because I've been coughing. So I guess it's just the spring allergens between here and Texas and just all over the planet right now. But anyway, we'll try to keep the coughing and the choking off mic. And if I disappear for a moment, you'll know where I went. Having a little hacking fit over here myself. But enough of that. On to the good stuff. Welcome, everyone, to another edition of Office Hours. Today's Monday, June 4th. And I guess not officially, but man, summer is upon us. And what an interesting summer Monday we had today. So before we get into the nitty gritty, just want to take a quick moment here to make the lawyers happy. Let everybody know that's in attendance that all the information that we share with you in this webinar, any of the other webinars, TI University, basically, well, not basically, literally, it's for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or another licensed person like a Series 7 broker, someone that is legally licensed to give you investment information. Okay, fair enough. Before we get started here, in case there are any brand new people in the room, we would like to take a moment just to let you know about the very vibrant community that we've developed around our one-of-a-kind software. And of course, you can see up here in the upper left-hand corner, Barry Anderson, he is the moderator of the TI Trading Room. And he does a fantastic job, and the numbers in that room are increasing on a monthly basis. Keep in mind, to get a trade room of this caliber, you typically have to pay for it. Well, not here. So if you haven't been taking advantage of the trading room with Barry, get in there as soon as possible. He opens up the room 30 minutes before every session begins and shuts it down shortly after. Of course, today's office hours with myself and Steve. Tomorrow, Steve's going to take the helm with Andy, do the Trade of the Week webinar. And then, of course, the middle of the week, good old hump day, Wednesdays, we bring in Dan Merkin and Brad Williams, our CEO, and Brad is our CTO. So it's always good to change it up. Always interesting with those two. And of course, for these 5 o'clock Eastern webinars, Andy rounds it out on Thursdays with the Trading Studio, and I ride shotgun with him. Of course, as probably all of you know, the big hit on Fridays is the support webinar, which can last anywhere between 2 and 3 hours. And it's pretty much anything TI related. You can come in there and get the help you need. You got myself, Sean, Andy, and Steve all in there, so you get 4 brains for the price of 1. So by all means, start engaging on the Friday support webinar. Of course, we've recently launched TI University, and these go from 12 p.m. Eastern to 1:30 typically. And of course, we can see the levels here: beginner on Mondays, 201 Tuesdays, 301 Wednesdays, and I teach the 401 advanced segment on Thursdays. So all in all, with these 4, the other 4, and Friday support session, we've got 9 webinars a week, ladies and gentlemen. So if you haven't taken advantage, get in there and do that. Great way to make your learning curve last as little as possible.
I'm not sure anybody else out there is doing 9 live webinars a week with interactive questions and answers.
I would have to agree with you, Steve.
Yeah. Yeah.
We've got a nice little system dialed in. And of course we made all these changes in the not too distant past, and we've been getting a lot of good feedback. We can all feel it working. So it is working, so get in there and take advantage. No cost to you is the best part about it. So of course you can see the visual that I have up here right now. AI introduced January 2016. That was our first AI, what we might call Holly 1.0 or the Holly Grail. But guess what, ladies and gentlemen? There are now 3 of them, okay? And if you're on the latest beta version that you can download from the website, you will have access to all 3 AIs, which were just recently launched sometime last week. Maybe the week before, snuck them into the dev version, but now they're out in full force for everyone to see. So, of course, we're always trying to improve, and we'll get into looking at the different AIs today, how each and every one of those did. It was quite a day. One more little thing here as well. This is a free ebook that myself, Sean, Steve, and Andy put together quite some time ago. It's free, and it's basically just a good way to prep yourself for when this bull market finally comes to an end. It's better to be brushed up on these techniques than have to scramble and do it when the time has come, and have to scramble to catch up. As Steve likes to say, chance favors the prepared mind. Definitely a good idea to get in here and familiarize yourself with some shorting techniques. And you can download the book at this address, tradeIdeas.com/ebook, free of charge. Of course, we did release the book right here in this area right here. This is the daily on the SPY. Of course, we can't claim complete credit. We didn't really know that that was going to happen, but, not bad on the timing. And a lot of people were able to take advantage of some of those techniques while we had this little correction, if that's what you like to call it. Okay, on to the good stuff. Here is what we're going to talk about today. And of course, it's a lot of the same stuff, but hey, we talk about the same stuff because it has relevance, right? It helps us kind of figure out, navigate the maze, because the market, or the maze known as the market, it's changing every day, right? And we have to kind of gear ourselves up and try to have some realistic expectations. So the time has come, Master Steve, if you're ready. We can take a look at the market, get Steve's input on where we've gone, where we might be going, and some of the most recent action.
Sure. Let me just, I'm typing a response there to Joanne. Joanne, I'm going to have to refer you to the info at trade-ideas, and they should be able to help you get started. And yeah, let me clear the unicorns off my desktop.
Yeah, get those unicorns off.
Speaking of unicorns, Jamie, Deadpool 1 and 2, run, don't walk, to go see those movies.
Well, you told me that. Of course, I always go in with tempered expectations because, as we all know, sequels typically are horrible. But
not this time. Not this time.
You got me excited. You got me excited, so I'm going to go check it out.
They obviously did a focus group and did a wonderful job. All right, let's stay on topic here. Thanks for passing the baton. Welcome to my desktop, everybody. I'm going to look at the market today and maybe pull a few concepts out of it. Start with the S&P spiders. I had been talking ad nauseum about this little downtrend line. I'm probably gonna go ahead and delete this tomorrow night. I'm gonna take it off for tomorrow night's webinar when I do Trade of the Week, but leaving it here for the moment for you guys to see something is kind of interesting. A lot of times I talk about these horizontal lines being pivot lines where prior resistance can become future support, which is what we had on this pivot line right here, resistance, and then we had 2 weeks of solid support. And then we had 1 day where we dropped back down into no man's land. I raised a caution flag, but said, it's still in no man's land. We got to see what happens. Well, what I want to highlight is on that particular day, it poked down through and popped up and closed right above this declining short-term trend line. And so trend lines also can have that same dynamic. They can act as resistance and then can come back and test it and become future support. So that's exactly what happened, it looks like, last week in the SPY, and that's okay because we popped right back up, closed above that pivot line, and we are just slowly trekking higher. So if I didn't have tomorrow night's webinar, I would make a big fanfare, and I would highlight this line, and I would delete it once and for all, because this has really been the guide that we've been talking about for the last 4 months. Guys, we've had 4 months of solid volatility back and forth, and I think we're finally getting a resolution to that. And what I want to kind of focus on is this today was a great technical move. As you can see, obviously it was a head fake last week, but this week we broke into the upside of that tight range. And what I want to say here is this is the kind of thing that stares you in the face and says, if you have been a perma bear and if you are a shorty and you just think the market should go down because of whatever reason do you think the market should go down, well, the footprints in the sand of the price action is telling you otherwise. And so I'm here today to say right now, full-on bear bull camp, full-on bull camp. A little bit of wishy-washy back here. I had my moments where I was getting bearish, But if you guys recall, I quickly snapped out of it, once the price action determined that we weren't going down. The worst thing you can do in this trading game is sit on your laurels or sit on your argument. I don't know if there's any attorneys in the audience, but attorneys face an extra hard headwind when learning to trade, and that is attorneys have been going to school and have been conditioned to argue one side of a point, and it makes it difficult to have an open mind and flip over and go, I was wrong. We're not going down, we're going up. And so I'm trying to tie all that together in a psychological kind of a point here to make that you cannot get dogmatic and stubborn in your directional bias and thinking. There's many reasons why we could sit here and say the market should go down. Well, there's also many reasons why we should sit here and say the market can keep going up. But ultimately, it's not data points, it's not analysts, I hate analysts, it's not CFOs, it's not CEOs, it's what the footprints in the sand are telling us. And what they're telling me here is all systems are go for the bulls. No longer even having a thought of possible bearishness in the general market based on what I'm seeing here. But again, I wanted to point this declining trend line and how the price action did come back and test it, and then we bounced right off it. Now that can happen on trend lines as well as these horizontal pivot lines that I've drawn. Probably wise to go ahead and clean some of these up here, but I'll keep these for tomorrow night's webinar because I'm going to kind of go over the same concept. And again, what I was trying to touch on there is, guys, don't be stubborn. You've got to have an open mind and be able to pivot quickly in your biases, okay? The Qs, I went ahead and already turned off the head and shoulders possibility that we were having in the Qs because the price action is telling me, you're crazy, Steve, if you're going to put here and draw head and shoulders and try and find reasons why the market should go down. The footprints in the sand are telling us, the train's leaving the station. Almost got to a brand new all-time high today in the Qs. I saw somebody tweet that, but I don't want to correct them, but very close in the Qs, which brings up a new high in the IWM. The Russell 2000 broke to a new high, all-time high today, and what that's telling us is the small cap guys, the small cap stocks are showing leadership at the moment. That's really only one thing you can determine from looking at this IWM chart. It's the only one of the four major indexes that went back to new all-time highs, but again, the Qs are patiently right behind. Again, the head and shoulders is off the table. We've got to be quick in flipping over. And again, that's why it might be harder for attorneys because they have been conditioned to argue one side to the death. What else? Oh, the Dow. Not much to see in the Dow. It's not quite as strong as the SPYs. This would be kind of the relative line that the Dow needs to break out of. But there's only a handful of companies in here where the S&P is definitely much more broad. And so I think the S&P 500, as usual, should be the benchmark. I'll just go ahead and highlight that again. We broke out of that little tight range that we've had, and we need to pay attention to that because that's telling us that if you're going to be a stubborn bear, you may have some more pain to deal with. But the price action is basically broken through all supply levels, all selling levels, all resistance levels, catch nets, whatever you want to call them, and it's looking good. Quick note, Microsoft traded week last week. Looking good as well. Trains leaving the station. All-time highs were broken back here, and that was our trigger for the trade of the week. That one is intact. Today's trade of the week, just going to skim it. I'm going to talk much more about it tomorrow, how we found it and why we picked it and whatnot. But Shake Shack is kind of a high short floater. And so when you get a stock that has a high percentage, 30, 40% short the float, and it starts making 52-week highs and setting off alarm bells and lights on hedge funds and institutions that want to go long 52-week highs. Well, at the same time, you got to see there's a ton of shorts in here that are not so happy. I mean, a 52-week high with a high short float pretty much means that nobody on the short side is in the money. And at some point, they're going to capitulate and somebody's going to jump up and yell fire in a crowded theater, and the short squeeze is going to be on. I'm very, very happy with the way the trade of the week triggered right on the open today. Here's the intraday chart, triggered up, pulled back, found good support, which basically was good support on Friday. A couple of tests down, but then we wicked right back up, and then a nice increase in volume into the close, moving higher. I would venture to say right here, this had the attention of some short sellers. trying to get out before everybody runs from one side of the lifeboat to the other. But that's what we're banking on here with this trade of the week. I fully think there's a great chance, a very good possibility we get through that blue line new 52-week highs tomorrow in Shake Shack. And if that's the case, well, then we've got a little extra confidence of that high giant short float that's carrying a lot of short sellers who are kicking and screaming because they're losing money, because we know nobody's in the money probably on a new 52-week high. Chances are that's the case. So that's doing good. I'll have more to say about Shake Shack tomorrow, but I think the big takeaway from today is turn your bearish hats in and get on the bullish train, because the footprints in the sand are finally giving us a direction here after 4 months of volatility, back and forth, painting into a corner, breaking out of that wedge, coming back and testing that wedge as support, and then firing off. And that's about as good as I can call it from what I'm seeing it here today. So maybe some more color tomorrow in the Trade of the Week webinar, but that's all I got for you here at the moment, Jamie.
Yeah, Steve, you know, on that shack, after that last gap up, they've all just been in hope mode as it meanders along, but nope, looks like it's headed higher. So.
Oh. Yep, and it's fun when you get these things to go, because one of the worst things we can do as a trader is go for, I'm going to take a bird in the hand rather than wait for two in the bush. Well, where you make money trading is being patient and having the virtue of patience and getting the two in the bush and the bird in the hand. Get them all. Having a high short float gives us another level of confidence. We're all human beings, and we're all wired to want to sell that position, at least half of it or all of it, to book that money we see. But in reality, we should be fearing that the price is going to continue 2 or 3 days higher without us. So if you're itching to sell, sell a third, sell a quarter. But my point is, when these things get going, they get going because you've got just a flywheel of momentum of short sellers trying to get out. And the only way they can get out is to buy stock. And they're competing with people who want to buy stock to go long. So when it works, the methodology is there. And again, any bit of confidence that we can add as traders, we always need as much confidence as we have to keep our finger off that sell button and try and let these trades marinate and work for us. All right, that's it.
Yes, indeed. I'll take it back here in just a moment, Steve. And yes, Marguerite, that is what a gap is. When, you know, if you're looking at Steve's screen right now, you see from, I don't know how many weeks back.
Yeah, let's look at this actually. And I'll talk more about this tomorrow. I'll really break down the chart and why I love this chart. But this was earnings, and two things can happen after a gap, okay? Stock gaps up. First thing that can happen is the price comes back and fills it, like a lot of the stocks we see do, or they just keep on going, and then it becomes what we call a breakaway gap. But unfortunately, you can't really call it a breakaway gap until you get a little bit of data under your belt, such as the gap here, the sideways action, rollover attempt failed, another rollover attempt failed, sideways action, and now we're pushing higher. Chances are this is going to be looked back on as a breakaway gap because it should have filled it by now. But hopefully that's what you were referring to there, Marguerite, and I was able to address that.
Very good. Okay, let me grab the baton here. Let me know when you have eyes back on, Steve.
Yep, got it.
All right, perfect. Okay, ladies and gentlemen, as I like to do a lot of the times here, you know, we always have to kind of have expectations, you know, throw some grass up in the air. Which way is the wind blowing? If we're sailing, you know, are the winds at gale force? Is there no wind? Is it just good, strong wind? Which way is the wind blowing? North, south, you know, just some basic things to prepare us. And so, right off the bat here, compare count windows. What did those guys show us today? Well, just drag my Twitter feed over here. And of course, these were put out 15 minutes after the open. And these are the big cap movers, or big cap stocks, I should say. $4 billion market cap or higher. So after that first 15 minutes, from what I could tell with the accelerated selling and buying, we had a pretty decent upside bias today. You know, typically I like to see something over 50 is good, right? But over 55 is even better. When we're at 55 and 50, it could be a little bit more iffy. Of course, we have to pay attention to where we are on the dailies. Of course, with what Steve showed us earlier, we got out of that trough and closed higher. So we'll see what happens tomorrow. But in any case, for today, this was a pretty decent upside reading. 56% accelerated buying in that first 15 minutes. What does that tell me? Well, it kind of tells me that, you know, the footprints that the institutions were leaving in that first 15 minutes clearly indicated there was a lot of buying to be done today. And of course, when we look at, let's get a chart of the SPY back up here on the daily. Of course, what do we have today? Well, we had our friend, let me just get post market off there real quick, declutter things a bit. What do we have today? We had the old gap up again. And then once we gapped and put in the highs and the lows, we're pretty much range bound all day, right? Of course, a lot of people, it's been a while since we've seen this type of action where we just stay range bound all day after the gap up. There's been a lot of attempted gap fills and false gap retracements and things of that nature. But this made for some very good setups today. We got the gap higher. We didn't really add a whole lot to it, but we stayed range bound pretty much most of the day. And the flavor of the day was definitely to the long side. So the compare count windows were giving us a little feel for that after the first 15 minutes. Now, notice right here, adding specific S&P compare counts in the future. And by the way, actually Steve configured these earlier. I modified them a little bit to my liking, but I'll be dropping these in the chat window before we're done here today, so anybody out there that wants them can pop them up there. Whereas this one is simply looking at stocks with a 4 billion market cap or higher, because that is what's been pulling the market up and down as of late. Of course, the Russell is breaking out, and decent compare count readings on those guys today as well, but I like to focus on the big caps. So what we're going to do is we're going to curtail these just to the SPY, right? So these windows that I'll drop in here in a little bit, they're just going to be looking at the SPY. Now you're going to see new highs S&P all, and then high volume. So you're going to have two different ways here, and of course this is going to be interesting to see what unfolds here. We're all going to be learning this information together because I've had this in the back of my mind for quite some time now. But will there really be a difference between, say, stocks above a $4 billion market cap and if we just hone in on the SPY components? Maybe, maybe not. And if there is one, will it have anything to do with the volume? Which one will be the better leading indicator? We'll see. So what we're going to have is just anything in the S&P hitting a higher low. And then, of course, I put some volume parameters on this guy. So it's going to be interesting moving forward to see how those line up with the older ones I've been using. So just kind of want to give you guys a little explanation about the differences in those compare count windows. All right, so you'll have some new toys moving forward here. Now, on to the juicy stuff. Of course, we always talk about Holly Grail, Holly 1.0 as we could call her. And we talk about how she did and, things we can glean and learn from her activities. But guess what, ladies and gents? There's not just Holly anymore. She's got two siblings now. So there's three of them. So 20.6 points today cumulatively between the three Hollies. So let's just take a look here, and then of course we're going to get into your Holly homework, which, by the way, we've talked about in prior webinars, but guess what? Your homework just tripled, right? You got 3 times as many trades to look at now on those daily setups to create your price alerts. I've created a few for you guys today just to get you started, and I'll also share those with you. But let's get in here and take a look at what's going on with Holly. So I've just got the regular strategies panel pulled up here. Up at the top here, you can see which one it is. Holly Grail, the first one, and we've also added the metric up here. Gives you a little trade count. So no longer do we have to sit here and tally up this column. We can see right here and go, hey, Holly finished the day, risk on, won the day for this one, up $2.21 on 20 trades. And by the way, this version is available in the latest beta. But once you get it installed and you want to go check out the other versions of Holly, how do you get there? Well, you just give the strategies panel a right click. We come down here to segments. Now we'll take a look at Holly 2.0. Okay, a little bit different of a point tally here. And as we can see here, whereas the first Holly, let's just pop right back over there again. Simple as that. The first Holly had a little bit of difficulty getting started here before she finally finished green. What I'll add to that is that we've always known that this version of Holly gets a little weird when we throw a gap into the equation. Could have been the gap on this one, maybe, maybe not. But what we're all going to learn moving forward, just like with those new compare count windows, the longer this goes on, the more days these models get under their belt, perhaps we will notice some correlations. And of course, I'm just speaking hypothetically about how I'm going to observe all of this moving forward. Makes sense. It's not real complex. But maybe we start to notice on gap up days, maybe this one does better. Maybe it's Holly Neo. But one thing is certain. This little guy did 29 trades today and finished up the day up 9.34 points. We can see all the trades just like we can in the first Holly right here. And of course, Holly Neo. Let's take a little peek at what that one did. Okay. On 27 trades, up 8.51 points. So my math might be a little off. I calculated these at the close, but somewhere right around 20 points that the AI family spit out today on quite a few trades. But the interesting thing, is going to be seeing how each one performs in certain market conditions. And you no longer have just one AI to pay attention to. You got 3 now, right? And what you're going to notice is that some of the strategies are the same, but some of them are different, right? Don't really remember seeing yesterday hammer, today strength in original Holly, right? But now you have a new strategy. You look over here at the stop loss. This is different than what I'm used to seeing as well. Usually it's a smart stop, maybe a 1%, like we have down here for cuts like a knife. Maybe it's just a hard-coded numerical stop like a little big guy, 30 cents. But this little guy right here says above low. So therein lies some of the advanced functionality, not just a new strategy, but a whole new way of using a stop loss with a custom formula. And of course, one of our newer additions to the team, Mr. Michael Noss, you might know him on Twitter as Bonpara. I'm pretty sure he was the architect of this strategy and been working with Brad to be able to use custom stops that are based around filters in the newer versions of Holly. So, see new strategies, new ways to manage the risk. Let's go back to 2.0, see if we see any other different strategies in there. Close to a cross. Don't really remember seeing that one. In the these are all just the same olds. But also keep in mind, if you see Holly Neo with buyers stepping in, and then you see Holly 2.0 with buyers stepping in, it's not the same version, right? The filters and things of that nature have been changed up. So you might see the same name in different bots.
But you'll notice the score is different, even though it has the same name. The backtesting score.
Right. So let's see here. Philip was asking, should we monitor the histograms after the first 30 minutes to see which Holly is working for the day? And of course, that's a great question. And let's pop back over because I noticed a specific example. I think it was in Neo. All right. Oops. Segments, Neo. Okay. Now, check out Neo. It got a little traction, and then it took a little whooshy, which is not uncommon when a system of this nature is starting to, pile into position. Sometimes we do have a little drawdown, and that's exactly what occurred today. But keep in mind, we can read this chart and act upon it just as if it were a stock chart. So if we're watching Holly Neo today and we see this little swoon, and then, it would be nice if I could draw a line right here, because what happens? The intraday hedge fund, if you will, the yield curve, it goes back to new highs and it penetrates them. And then it just catches traction and pretty much, it takes its pullbacks just like a stock, but man, it was off to the races. once we surpass this little point right here. So yes, Philip, you can watch the yield curves and pretty much react to them like you would a chart, right? Pretty obvious with Holly Neon there was a breakout on the equity curve. Now if we go back to 2.0, not quite, you know, that setup, but pretty much the same right here. We just didn't have as much red, right? So, you know, if you treat these things like a stock breakout, a lot of the times you can get an idea if, you know, if things continue strong and you start to see these levels get broken on any particular model, then it can be used as as something that gives you confidence to go, okay, I should start being more aggressive with these guys now because they're all catching traction, right? So, you know, typically I like to pick out a few trades and we'll talk about risk on and risk off. Of course, there's a gazillion of them.
Can I add something to Philip's question?
Please, please.
So going forward, I know Dan and Brad are very close to really creating a nice dashboard that doesn't require us to click back and forth, no, having a dashboard with some nice pie charts, some risk on, some risk off, and so you can be able to see at a single glance how each segment of Holly is doing and start to glean more information from that dashboard. So this is just the beginning. There'll be much more coming to help really orient our eyes and help orient our decision process with the advent of the two new AI pools.
Exactly. Easier to use, easier to see, easier on the eye. All right, well, let's do what we normally do here. Let's just talk about a couple of risk on, risk off type trades. And what I like to do is focus on these on a trade by trade basis. So, hey, Ollie looks pretty good here. All right, so Ollie, 20 minutes after the market opens, she fires off the long from Sunrise Mover. Of course, looking at 15-minute candles here. And all the metrics for the trade are laid out for us right here. We got our stop loss, we've got our entry line corresponding with the blue line. Of course, the blue arrow is just showing us the candle. These are 15-minute candles. And of course, a price target as well. Now, Ollie, in risk-off mode, why did she get out of the trade? Timed exit. She's programmed to exit at a certain time, just like she is if the stop loss comes into effect. We can look at Sunrise Mover on the strategy panel here and see that it's geared around a 30-minute hold time. Well, she didn't get stopped out. Profit target did not get hit. And she exits somewhere right in here. This green box is the time that she spent in the trade on risk off. So she just does what she's programmed to do, gets out, makes her 70 cents. Now, of course, when we see Holly getting out of the trade, assuming the chart dictates it and we're comfortable with what the chart is showing us, which is important, and we feel like there might be a little bit more meat left on that bone, then we can ignore Holly's exit signal and say, you know what, I'm going to take on more risk. I'm going to risk on this trade because the chart looks very conducive and I think there's more left in it. Of course, if you made that choice today, we got $1.85 between 70 and 255, so that's quite a spread. So the name of the game is getting some of this spread. You know, we used to try to spread trade stocks between the bid and the offer. The name of the game here is very similar. Are we going to get all the spread? Not likely. Maybe every once in a while we'll top tick one, yay, but that's not the norm, that's the exception. But still a lot of room between here. Even if we only pluck an extra 25, 30, 40 cents, that still can make a huge difference over time. Also too, this can take a little time to get used to. So the really, I guess, pragmatic way to approach this is do a little bit of both, right? Until you get really familiar with what you're seeing and interacting with it, do a little bit of both. If you took 200 shares with Holly and you see her getting out on that timed hold, peel out of 100. Set your stop loss on your break even right above the entry signal or right at the entry signal. So if it does roll over on you, you lose a little bit, but it's still a winning trade because you book profits on the first half, right? Of course, in this case, never even acted like it was going to approach that line. And if you held that second lot for risk on, you got paid, and you got paid quite well today. So Marguerite's asking, in which mode, risk on or risk off, are more trades completed in general? Well, it's just two different data sets, Marguerite, all right? This is showing you what happened on risk off, and this is showing you what happened on risk on. So Holly always trades risk off, right? That's what her exit reasons are going to be. We just make it available to you to see, okay, look what type of day it was. If you played by the exact rules like Holly, $3.11 is what the yield was. But by accepting more risk on a day like today, 3 times that was on the table. So all of Holly's trades, she closes them out on risk off. Risk on is for us humans to look at the chart and go, do I think that this trade is acceptable to stay in, you know, based on what I'm seeing on the chart here.
In the last few days, it has been. Risk on has been a mother the last few days. And just to add some color there, it's the exact same set of trades. So there's no more or no less in either camp, Marguerite.
Right. Of course, here's one from a different, completely different strategy. Nice chart. Ooh, and what a nice tame chart that one was. Now, why did she get out of 5? Well, profit save. So the 3 basic reasons that Holly could exit when we first brought her online: stop loss, profit target, or timed hold. But with those 3 things in place, it was possible for her to let, say, a 50-cent winner turn into a flat or a loser. Well, not really good for a system of this nature. So we brought in 2 additional exit criteria: profit save and reduce risk. So if Holly's in a winner and it goes up a little bit and then it's just meandering along, it's not going up as rapidly as she thinks it should, or if a stock is going against her and it's just slow grind, down, 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 she also has the ability to close out a losing trade early as well. So in this one, 5, she gets into it and then she gets the sideways action. So she goes ahead and pulls the plug and takes her 25 cents. And of course, we can see that was about right here. And of course, when we see these nice, you know, smooth little consolidation areas, we can make the decision. Well, do I get out of all of it with Holly? Because 25 cents isn't a bad trade, but, you know, we can see it hug the line here. And as soon as Holly got out, it just meandered along most of the day and eventually went up. Of course, we can always identify things that might actually be good to add to as the day progresses. This one took a little bit too long. You know, technically you could have added to that trade as it broke that plane and set new highs. That's a little late in the day, maybe the last 45 minutes or so. But a lot of the times on these nice setups, this pattern will repeat itself, you know, whether we find it from a manual trade or whether Holly brings it to our attention. But once again, big spread between 25 cents and $1.67. And, you know, even if you only picked up an extra 15, 20 cents, you know, that really does add up over time in a big, big way. Let's see if we had any stop outs on this one. And I'm not seeing any. I know we did on the other one, because sometimes when Holly gets stopped out, we can still take advantage of that as well. Let's flip back over. I think that was Holly Neo where we had that. Okay, so we did have a couple of this. I think it was the BPMC I was looking at earlier, Steve, and actually we were commenting on this one amongst ourselves today. BPC, not a bad entry here. It just, you know, look at the stop, right? So BPMC, what was the stop on this one? Yesterday hammer, today strength, one of the new strategies, and we can see that if it doesn't work and it gets really close to, you know, of course we can see the red line here. So it was just a really tight stop on this one, right? Get stopped out, get long here, get stopped out shortly after. But if we draw, you know, of course we don't have to draw the line. The blue line is the entry line. Sometimes the timing is a little bit off, right? So we see Holly get stopped out, we see it creep back up, hit that line for the second time. Could have taken a stab at it using somewhere around here as our low if we felt comfortable doing it. But this is what we like to refer to as a trade around. seeing holly get stopped out of something, seeing that stock come back up to the entry point again and then push through. Sometimes it goes on the second or third try. We're in the process of building in some functionality that will allow people to take advantage of things like this. In other words, in the future, when you're able to automate holly trades, you can give it instructions something to this effect. Okay, for each symbol, I want to have 1 attempt, 2 attempts, 3 attempts. So you can dictate moving forward. Oh, okay, well, sometimes we get stopped out. Maybe I'll have 2 attempts per signal. So, you know, once again, just wanted to give you guys an example of a trade around, second entry or the second occurrence through that entry line, because sometimes the timing is just a little bit off. All right, and this guy was chock full of risk on as well. This one was coming through some of my high volume tickers all day today. And once again, holly gets a little bit nervous, gets into it right here. Once we get these 2 little topping bars and a little sideways action, she pulls the plug on it. Takes 25 cents, but of course, 75 and 13, another 83 cents on the table there. If you're using a rollover stop to the break-even point, this one might have got you out, but you still made money on the second occurrence, or excuse me, the first occurrence. But what I like on these, you know, and of course holly sometimes points these out, the stocks that she puts us into end up doing this. But as this thing crept through later on and the volume was good, you could have had another pop at it. A lot of the retail stocks have been going up, so if you're in tune with that as well, and you see holly in a retail stock and it's flopping around a little bit, you know, some of these things can really be good entries later in the day, not just in the time that holly traded them. So Steve, anything else to add about holly or about the 3 different versions that we have now? Because I know, you know, we've been getting this question a lot. Well, how do I know which one to watch, right?
Well, we're right there in the boat with you. We're going to kind of, you know, devise a methodology as well. And the thing that I feel most important was what I chimed in with earlier, that we're going to be having a dashboard and we're going to be able to make sense of this data and get a lot more perspective on it without having to click around and exercise our brains. So I'm really looking forward to, you know, 2 things. I'm really looking forward to that dashboard so we can start to see, hey, there's a directional bias in all 3 hollies, right? Mm-hmm. So before, when we had, you know, just 1 holly going all longs or all shorts, if we have 3 buckets and 3 different pools of hollies, either doing all long or all short, well, that's just more confirmation of a great directional bias. It's going to give us more solid data there. So I'm looking forward to the dashboard and what we can start to glean from that dashboard at the 30,000-foot view. I'm also very impressed with risk on. I don't know if it's just a function of where we are with the new hollies, but risk on has just been killing it the last 3 or 4 days, and curious to see if that abates. But I don't know why. It's just the way it's been.
Well, and true, and with a statistical model, you know, we had a little rough patch there for a while, and now it's
well, going back to what I was saying in the beginning, if we're breaking out into blue skies, well, maybe I answered my own question.
Right. Okay, so once again, download the beta version. You have access to all 3 hollies. Just right-click and go down to segments to pick the one that you want to view at the time. And of course, you know, really just barn-burning results today from Neo, and the second one, the first one's still not too bad, but man, the second 2 really stood out today. So we will continue to see what holly brings to the table. Tomorrow's a new day. Now, I also want to take a moment to just talk about some of the other setups that were out there today, especially due to the market conditions. We got the gap up and we got the range bound trading. From my past experience, these types of setups that we can find out of the high volume tickers, like my turbo up no resistance. You know, you might hear Andy talk about his high low pro volume. Just kind of they're kind of, you know, cousins. Mine's a little bit different, but they're both focusing on high volume. And I wanted to point out just a couple examples because these things were all over the place today. But the couple I just want to point out NTN, which was all over the map today. Let's see here. There we go. This was pulled from, turbo up family no resistance. What does turbo up no resistance actually mean? Well, we're looking at stocks that are hitting highs. That's the simple alert, but that are doing excessive 1 minute volume and that happen to be hitting all-time highs. Now, when they're hitting all-time highs, that's no guarantee it's just going to keep on going, but it's a very nice characteristic to have if you found a nice snuggly place to get long on the intraday, right? So we can see here, it had a pretty, 1, 2, 3, 4, 5, 6, first hour and a half, 2 hours, boom, popped up here, put in its high, took a little retrace, and then slowly but surely the buyers were in there all day, and then boom, right here it went, and then the volume kicked in right here. So, if you're seeing this bar right here, anywhere in that bar was fair game, you're not chasing at all. We got a 15-minute look back to establish our risk level, which would be the bottom of this candle right here. It's a really nice risk area. There's my line, there it is. So we got a nice risk area here, and this was the reward area with pretty much a pain-free trade. Now, of course, sometimes you're going to pull them up and they're already gone, but it's about identifying the pattern. If we're using the hunting analogy, the animal that we're looking for. All right. So this was a great example. Nice entry on the daily. We got low risk. We can see what it did. And it has the added benefit of not having anything to the left to run into, which could act as resistance. Now, the next one I want to talk about here, a little bit different of an animal. Now, the pattern is the same. So what did we have here? And what I really liked about this guy right here and this entry bar right here, the high was already gone. It had started pecking at highs about right here. But I wasn't so sure about this one, a little bit thinner. But what I really liked are these pre-market bars just really caught my attention because we had prior close here. Boy, it went all the way up here, traded down. But I liked the fact that this little bar right here was being broken, right? And this thing was just doing massive, massive volume all day. We can see it close at 11.88. And once you made that entry, here, either here or here, once again, pain-free rise, all right? Even another opportunity to potentially add to the position here. And the volume just never let up. So I always like to talk about these are a little bit different over here because we're not using the typical daily volume requirements that a lot of people like to use. You'll notice in all three versions of these, there is no average daily volume. There's simply market cap, either over 4 billion, between 2 and 4 billion, or below 2 billion. Now, this is one of the guys below 2 billion, 1.4 billion. But if I was filtering by average daily volume of, say, 200,000 on the 10-day or the 3-month, check out these values down here. I would have never seen this stock because it usually trades 160, 185,000 on the 5 days where it's been picking up. So using average daily volume 250, 300, which is what a lot of people like to use on the low end, would have never seen GHDX today. But because I'm not using that and just waiting and seeing what comes through, I was alerted to this one today and could take advantage of it. But, just keep that in mind. What are we hunting? We know what it looks like, and it doesn't matter if the stock usually trades 100,000 a day. If the volume is in it today, and we can see right here, finished trading 1.3 million shares today, well, then it's a tradable stock. So doing it a little bit differently through this window. And by the way, anybody that wants the turbo up, all you have to do is cruise down to channel 4, which is the channel that myself, Steve, Andy, and Sean all contributed our favorite strategies to that channel. So just click on that channel and right-click and save to cloud any of the windows that you want in there. All of my favorite windows, Steve, Sean, and Andy's, are all in there. That way we don't have to pass out the cloud links that have been getting busted. And you can go get them anytime you want them from channel 4.
Hey, Jamie. little hindsight, I was gone on the 21st, but if you look up a few questions from David, he's reminding that you had a good eye on setting a couple of alerts for BGS and our friend Shake Shack. And he was pointing out that they both triggered today and had a nice move. So
Excellent.
just the virtues of patience and setting it and forgetting it. Sometimes it takes a week and a half, 2 weeks, but hey, it worked.
Right, right. And, that brings up another good point, is just letting the patterns come to you, because, this didn't happen for a good while after the open, right? And there was a lot of things like this out there today, which leads me to the next topic here, which we just have enough time to get through. Don't forget your Holly homework. And I believe we did this last Thursday, I think.
I'm guessing that's what you did.
Right.
On the 21st as well, yes.
Holly homework, right? Yeah, I handed out some price alerts. So that might have been what he was referring to. But that was when we only had one Holly. Well, guess what? Your homework just tripled, ladies and gentlemen. But guess what? There's nothing better than when your homework makes you money instead of a good grade.
Yes,
so what you're going to do is, after the close every day, you're going to pull up each and every Holly, and you're just going to start. You don't have to do it in any, no method to the madness here. And you're going to start scrolling through all the symbols and seeing which ones catch your fancy. And the ones that do, you're just going to start right-clicking and setting some price alerts. Here are the ones that I'm going to leave you guys with today. Of course, this was the trade of the week, which is already triggered, up a nice $1.09 at the close. But these are all the ones that I kind of liked. And I went through, I think I got through 2 of the Hollies, not 3 of them, but 1, 2, 3, 4, 7 of them to get you started. And then go ahead and do that, because everybody's a little bit different. A lot of these are going to look similar. Like if we look at Kemper, here it is butting up against all-time highs, going sideways. But guess what? When it cracks this level, you'll get that price alert. Glance down at your single stock window or whatever else you look at to monitor your volume. If that thing's cracking good volume on that day where you see that alert, well, that can be a very good trade. These are continuation trades from the low. I've thrown in a couple that have already punched through, because sometimes they like to pull back. So, sometimes you can get some nice pullback fills butting up against what is now going to become support moving forward. All right. So get into this habit every single day. Just make it part of your, post-market activity. You scan through all the Holly trades. You set price alerts for the good ones. It's going to be interesting to see how many fire before the week is out and what the tally might be. So let me do this. I'm going to drop these in to the chat window. And that's assuming Jamie knows where his chat window is. Okay, so we got price alerts on this one. And I also want to take the opportunity to drop in the new S&P compare counts. All right, SP SPY-CC high volume version. And just the overall S&P with no volume requirements, just anything in the S&P hitting a high low. All SPY components. All right, so you guys have the price alerts and the 2 SPY-CC compare count windows. Grab those cloud links, load them up. Let's watch them moving forward, and we will see what happens. So, Steve, any closing comment before I bring Mr. Scott in?
Just Philip's question. We don't open the hood on the actual filters and settings of the Holly strategies. Those are proprietary, but what we do is offer a thumbnail sketch of what the actual strategy is, and it's on our website. And I'll just direct you to it. All you do is just go to the bottom of any page on the footer, and right below FAQ, you'll see AI strategy thumbnails, and that is the best we can point you towards. At least it gives you an idea of the flavor of the strategy, what it's looking for. Red are shorts, black type is longs, and so that's the best we can offer without giving up our proprietary information.
Right, and the AI is doing all the heavy lifting at night or when the market's
Oh,
closed. It's,
and let me just add. Let's say we did do something like that and gave that to you. Well, in 2 weeks, you might come back to us and say, "Why did your 5-day bounce trigger XYZ and mine didn't?" Well, because every single evening these strategies are being reworked. There's never really one version. It's always in flux. It's always being optimized. It's always being refiltered and rejiggered. So it would just be a week or two before you have a completely out of date copy anyway. So I just kind of want to leave you with that.
no, I agree completely, and that's the benefit of the AI is doing all this massive heavy lifting that we would never have the time to do, even if we had a team of 50 people working 24/7, right? So going to be really interesting to see how all the Hollies do the remainder of the week. You got some price alerts, you got some new compare count windows, and we'll all be watching those moving forward. So it's going to be interesting. So thanks everybody for attending. Stick around if you're not a subscriber or you're thinking about upgrading, because Scott's going to show you how you can save a little bit of do-re-mi in those processes. All right, Scott. Ready when you are.
Sounds good. Pull those slides up again, and we'll talk about the important things on the way out. There's also an attachment if you want some of these slides I'm about to talk about for your review later on. Just go ahead and expand the handouts panel, and you go to webinar interface and click on the link. We've got a podcast, and there's a new one up on Friday. It's a good one. The last two have been really interesting. In fact, we had this last one we had Brad Williams, our COO, and he's in charge of a lot of software development on for some inside talk about that. Also, the previous week, Dave Mabe, the guy who's really responsible for the backtesting, the oddsmaker tool that evolved into Holly the AI, a lot of the heavy lifting on that and the development of Holly the AI and the two new ones that just came out. So if you really want to find out what's going on behind the scenes, search for Trade Ideas Podcast in whatever app you listen to podcasts in, and make sure you're subscribed. Download the last couple of episodes. Go into the back catalog and listen to some of their wisdom back there, too. And then there'll be a new one up on Friday. We try to do one every Friday, so make sure you're subscribed. There is a code for you. Holly Summer is good this month. So use that for 15% off your first month or year of Trade Ideas when you sign up to start your subscription. Or if you're a subscriber and you want to upgrade from standard to premium, take that code and plug it into the Change My Subscription page. So you just log in on the homepage in the upper right, and once you're logged into your account management section, just click on Change My Subscription and use that code when you're selecting the new one, and you can save 15% off the first month or year that way as well. Thanks, everyone. The recording will be up later on tonight or tomorrow morning. You can shoot your questions to info@trade-ideas.com, or make sure you follow us on Facebook, facebook.com/tradeideiaspro, and share everything we post with all your friends. And you can follow us on Twitter, too. Steve Gomez is at Today Trader on Twitter. Dan Merkin's at Trade Ideas 1. Jamie Hodge is at QuantBot. Thanks, everyone, for tuning in. Thank you, Jamie. Thank you, Steve.
All right, see you tomorrow.
Go get
My pleasure.
Get some rest
Tomorrow. Hope you feel better, Steve.
Getting there.
Have a good one, man. Later, guys. Bye.